This conference will now be recorded.
Good morning, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 12:20 p.m. The time change today on a Sunday, March 10th, 2019. This is one of the periodic coaching webinars that I do for all members, specifically newer members who have been with us for less than a year and or so. Uh, and we are going to begin. Full disclosure, this is purely for financial education, not for any solicitation or advice. And session will be uploaded to the Google YouTube channel, as you all know, so you can review it at any given time, pass the word around. And of course, we have our Instagram account, which I hope all of you are following. It's very, very important to follow, as I was explaining to one of our newest members yesterday morning on a training session. That at the end of the day, I highlight a good portion of at least some of the highlights of some of the more powerful trades that we have done during the day. So it's a very quick way of looking at, and I'm going to show it to you right now. It's a very quick way of looking at these options charts, which I don't always get a chance to post during the day because things are so busy. But at the end of the day, you can quickly look at, throw in a couple of my pets and stuff, and car here and there, that's Instagram stuff. But focus on this. So this was big lots. So this is an options chart that you can easily open up and say, okay, this is what happened. All right, maybe you did it, maybe you didn't. This was part of my earnings call the day before, but at least you get an idea of what these powerful trades, which can very easily, mind you, um, uh, take out the negative ones that have happened during the day because the market opened down, then it climbed up, as I said. But at least net, it feels good because you get a couple of earnings winner, you get a couple of breakouts, you mix them up, and at the end of the day, you're actually coming out green in the middle of a down day. And it's happened quite often, not always, but it happens. So this is one way. That's the reason why I tell people you got to follow the Instagram. I'm not going to ask who is following, who's not following, but if you don't do that, you don't get to see these. Now, this is not real time. This Instagram is not there during the day for you to basically trade off the Instagram. That's not what I'm doing. This is, I highlight whenever I have time, almost every day. At the end of the day, I take half an hour and I post out some of these powerful options trades that we have done so that the world can know what Clueless Day Trading is all about. Now, the real-time content is always on the Twitter feed, as you all know, because that's for paid members. Um, so that was one. Then you had this. This was Tesla. Then you had this. This was Electronic Arts. A huge winner. 2 days in a row, 3 days in a row. Just running with it. Okay. So these options charts gives you, this is an actual options chart. This is where we bought, this is where we sold. Now these have been alerted on, every one of these are alerted on the Twitter feed, but I'm showing you in visual representation on an options chart some of these powerful, big time monster winners at the end of the day. So if any of you are not following the options chart, here's another one. This is TTD. This was earnings, what we had done previously back at the end of third week of February. That's Trade Desk. Now, if these things don't shake up somebody's head, then I don't know what to say. So you got this here. This is 12 plus. This was Costco. The Costco calls went from roughly about $1.70. They went. This was the day before, so I said Costco weekly options. What do you think these calls will open Friday morning? This is where the Costco calls open Friday morning. They went to almost. They were up 233%. They went to $5. Yeah, $5 and change. So if you want to help yourself, make life a little bit easier for you on the trading side, follow the Instagram, check it out at the end of the day, roughly around 8, 9 p.m. Eastern time, and you'll see that. and pass the word around. I've asked everyone, I've asked Drew, I've asked other people to go ahead and tell their friends to follow this stuff, because after all, it's good stuff. Anyway, so we have the Google YouTube channel for all the videos, everything, strategic videos, the free ones that I put out there. And then we have the Instagram channel. We have Facebook. I post on LinkedIn, but I don't really interact it too much. But I post the videos out there. Anyway, what I'm going to do today is do an open format. All right. I'm going to ask you guys, what you want to know, and I'm going to try to help you guys with that. And we're going to do this within the next hour. By 1:30, I need to clap that. We also have our 8:30 p.m. Probably going to be around 8:30 p.m. With the time change. The weekend webinar, which is going to talk about the forecasts and all that stuff. So be ready to attend that if you're serious about, knowing a little bit about what will happen next week. All right, so let's begin. So any one of you throw out a question, what I can answer, whether it's a stock strategy question, I'm here to answer. Go ahead. Please. We don't want to waste 1 hour just, kind of staying quiet. So I'm leaving this format open for the first part. Well, for your questions, to answer your difficulties you're having, what you need to know, and what I think, could be a good strategy. Anu?
Hi.
Yes, Serge, go ahead, sir. One person at a time. Serge, go ahead. Anu, hold your question. Go ahead.
My question is about when is the best time to take a loss?
That is probably one of the hardest questions to answer. Okay. Generally speaking, if you are newer to options trading or this type of volatility trading, keep in mind the markets are extremely volatile. Okay, this was just Friday alone. All right, we started here, we opened down, we went all the way down, we did a double bottom, and we ended almost positive. So I'll give you that's a very good question. So I'm going to give you a direct example. Let's say that from the day before, and this is just a regular chart. I didn't draw anything on it, anything. Okay. So this is Thursday. So let's say you bought something on Thursday at around, Thursday the market dipped. So you bought something at around 2 o'clock. You bought something around 2 p.m. 2 p.m. Thursday. So you buy an option. I'm not naming any stock, whatever. You buy an option. Let's say the SPY. This is the SPY. So you bought the SPYs here at 2 p.m. because it saw the dip. I alerted. Go ahead. You bought a little bit. Opens up. Market closes around here at around 4 p.m. So you're feeling good. You're like, okay, looks like it looks like there's going to be a at least a bounce, and you're looking to take profits around here, because that would be standard procedure with the market closing here. General technical analysis says, all right, it looks pretty likely that we're going to basically bump up a little bit in the morning, and you're looking to sell there. So Serge, are you understanding what I'm saying at this point?
Yes.
Okay, good. So follow me. So this is the realities of what happens in the market. So then what happens is in the middle of the night, all kinds of things happen. The market's kind of moving sideways. This is after hours. This is obviously we're not trading after hours in options. And then midnight crosses over. We are now crossing over. So this is Thursday, and this is Friday after midnight. Market is drifting. Global markets are drifting. And then right around 7:30 in the morning, so far it's drifting slightly lower, nothing that crazy. And then right at around 7:30, bang, we drop. Why? Different reasons. There was the China trade talks. The U.S. ambassador makes a comment that they are really not looking for a final deal at this point. They're having difficulty, all kinds of stuff. This drop that came about in the middle of the night, or I'm sorry, this drop that came around 9:30, was primarily because of China data being weak, Chinese economic data coming out. Their exports were quite weak. Obviously, the world economy is a little bit slower because of this trade friction with the tariffs, so things are weaker. But this drop comes because the US job data comes out, and we only created 20,000 jobs in the month of February. Now, that's obviously not a real number, but the market takes it. Now, why is it not a real number? Because we had the government shutdown, there were all these adjustments made, blah, blah, blah. Whatever the case, the market's like, oh my God, the US economy is really slowing down. So the market drops hard, 9:30 market opens, and you're all the way down here. So you bought something here, and now you're down here. So this is where your question comes in. This is where my answer begins. So the first thing that a average trader does, who is not trading off my type of charts, he says, oh my God, I bought something here at 4. Now it's down here at 2. Market looks really, really bad because it's opening down 100 plus points. Let me sell. Okay. So that's one option. You can sell. You take your loss, and you said, okay, I can take this. A chart trader, a strategic chart trader, basically says, let me see how the market reacts within the first hour to 2 hours of the early session. So from 9:30 to 11:30, let's see how the market is reacting. Now So that's what I do as a professional trader. So I'm looking at it. I'm not liking the fact that I'm down 50% on that position, but I'm looking to see, I'm reading the markets like a robot, like I normally do, and I'm showing these charts to all of you. And there's a lot of volatility, up, down, then a big move up around 11 o'clock. Then it starts to go up a little bit. And this is the simple chart. If you go through my Twitter feed, you see the more advanced ones, which are telling you that it looks like the market is probably will bounce. I said that on Friday. I said the Dow Jones will probably go green, and it almost went green. And this was when the market was way down. Now, I don't make these, just so you all understand, I don't make those comments to make myself feel better or you feel better. I make those comments based off my charts. I was seeing some technical indicators bottoming. I was seeing the VIX starting to create the red candles. By now, you have to watch the VIX. If the VIX is starting to create that multiple red candles, this, by the way, this answer I'm giving you, it directly will address the complexity of when do you sell. So 1 second, or when do you not sell. So I'm watching the VIX here. 1 second.
So you look at the buyer before you take action.
I'm looking at the VIX here, so I'm making a determination. Should I completely sell out, or should I wait? 1 second. Let me go back to that chart. So I watch depending on what the market conditions are. I normally give the market a little bit of time to settle within the first hour surge. That's the easiest answer I can give you. Now, if I see technical breakdowns which are breaking down, I will take losses anywhere north of 60 to 70%. Keep in mind that there are 2 types of losses. If I take quick losses on the spiders, then I know that that can easily bounce. Not easily, but it can bounce during the day. So on that one, I'm a little bit more patient. If it's an individual stock, like let's say earnings, which I see it break down and it doesn't see like it's going to go up much, and also I see that I don't have too much time left on those options. If I buy if I only have 2 days left, and that earnings trade didn't work out, I will leave it. And if I don't see a reversal, as you know, we play earnings reversals very, very actively. So I would watch the first hour, look what happened, and then what I would do, which I did, is I bought at these levels, and by the end of the day, I was beautifully profitable on my SPY calls. And I sold a bunch of them at around this level, and left some of them for the following Monday. So in answer to your question, the first rule of the thumb is, depending on the amount of money you're trading with, you should be looking at a loss of about 60%. because options move fast. So if you put a loss on options at a 20% stop, then you're going to basically lose that. It's just going to go up against you and take you out with a 20% loss. Now, if you take a 20% loss and you manage to get in back in again, that's fine. But I generally, rule of the thumb is, depending on the amount of money you're trading with an option, your stop losses have to be wider than a stock. So with a stock, you can handle a 10-15% type of downside, but with an option, you have to look at somewhere around the 50 to 60% as a viable limit on the downside. Now, when you exactly sell for a loss, well, this is one rule. The second rule is you got to watch the charts. I add at these levels and then obviously get rewarded nicely. Does it happen every single time? No. Does it happen a lot? Yes. Especially if the market's open. Here's another answer. If the market is opening down a lot, this was Friday. This was Friday. If the market opens down a lot, do not sell right away, because that is the biggest amount of panic selling that happens within the first 15 to 20 minutes. And guess what happens after that? The market moves higher. So if you are going to sell, minimize your losses by selling by not at 9:30, but after 10 o'clock or at around 10 o'clock, because you automatically see a quick short covering bounce that starts off somewhere around 9:45, 10 o'clock. And then the market pulls back around 9:30. That's generally what the markets do. And then makes another run up around 11. Now, these are days that the market's opening down, okay? And then there is another sell-off around 12. That's because of the European close. And then the real US market players, the big boys, they will make their decision what they want to do primarily between 2 and 3 o'clock. This is US. This is the institution money managers, the ETF players, the hedge funds. Well, the hedge funds are trading all day long, but the big mutual funds, this is United States. That's when they decide what they want to do, generally between 1:30 and 3. This is European. This is Europe. On a bad day, Europe, on their closing tick, they will basically have to sell for margin calls. This is basically the average trader panicking and selling. So you don't want to be selling between 9:30 and 9:35. This is the short covering bounce. This is the next round of buyers who come in. And the market generally between 11 to 11:30 will attempt to make a top to see if it breaks out. If it doesn't, the Europeans come in and sell. And this is what the big US institutional funds, the Wall Street players, the big ones, the firms, not individuals, they decide what they want to do. So that's how it works. Did that make some sense, Serge? I hope it did.
Yes, it's perfect.
Thank you, sir. It's a game of skill, depending on the individual option you're in. If you're in an individual stock, that's a different story. It can just open up and keep running. We've seen that. Generally speaking, if I am up a lot on something on an up day, I will sell pretty much 60, 70%, a lot of it, boom, right there, and then sit back, because I have multiple positions. So the big ones, I'll take the money, and then I will look to see to re-enter. Anu, with your question, please.
Yeah. How do you know a stock is going up? If
Okay.
is it do you see the pattern of how the candle is going, or the news, or what is the factors
Yes.
that?
Yeah. So it's a very good question and a simple question. Basically, I focus a lot on the candles, big time. So I'll give you an example. Let's look at Electronic Arts, which is still in play and a powerful play. There are two ways you look at a stock chart. You look at the longer term chart to see where the stock can go, and you look at a shorter term chart, such as a 15-minute chart or a 1 hour chart, to determine how you can make money in the short term. You follow me so far?
Yeah.
Okay. Now, I put multiple charts out there, as you know, and I show primarily on my Twitter feed, I show short-term charts and longer-term charts, but primarily 1-hour charts and 15-minute charts to show you all how fast things are moving and how you can make money in a shorter time frame. All right. So saying all that, what other? So 1 second. So this is just a naked chart with nothing on it. None of my lines drawn and anything. So first and foremost, you look at, and I haven't drawn anything on top of it. So let me see. What do I have here? So first and foremost, when you're talking about looking at charts and whether a stock is going to go up or not to obviously make a decision on whether you want to trade that option. Is that correct?
Yeah.
Or are you
Yes.
talking about trading
Yes.
the stock? Okay. All right. So when it comes to trading the option and stuff, you also first and foremost you have to decide in your mind like what time horizon are you looking at? Are you looking to make money fast, or are you looking to basically make money on this on a nice way for the next week or two? So that's the first thing you got to ask yourself. The second question is if you're looking to make money, obviously everyone wants to make money faster. You want to look at the 15-minute chart and you have to determine what is going on. Now these charts, I haven't drawn anything on it, so I'm just going to show it the way it is. First of all, you want to look at the volume. The volume has to match the candles. If there's heavy volume coming up, and this is on Thursday, and we started playing this stock on Thursday, as you know, Wednesday and Thursday, you got heavy volume coming in, all in green candles, and the stock is basically moving higher. You obviously want to at that point be in it. So this is a shorter term picture. Now by Friday morning, this stock almost hit 100 on Thursday. If you remember, this was one I was pushing. I was recommending Electronic Arts quite a bit because those options were really going crazy. 95 calls, we were long. We were long 98 calls. We also were long 100 calls. So you remember that, Anu, right? On Electronic Arts?
No.
Okay. Then obviously you're doing something wrong. So you have to not necessarily just follow, but you have to know the stocks I'm recommending. All right. Then only then can you make the money. I mean, so you see, if you don't know that, then you'll have a difficult time. So anyway, so in answer to your question, Electronic Arts was a huge winner. Huge. 400% options winner. A whole bunch of my traders did that, and if you didn't do that, then obviously you were not even looking at the Twitter feed because I showed it many, many times. So you look at candles. The candles basically are telling you which way it's going to go. At a certain point, the stock gets kind of stops. I knew it was going to basically ease back at $100. So on Friday morning, I had sold a whole bunch here. I still had some. And on Friday morning, when the market opened, I got a chance to leave some here. I mean, sell some here again for nice profits. And stock came down, nothing crazy. And then it went back up to 100 again. And I sold a little bit more. And then I started to buy back at this level. So I watch the candles, I watch the volume. Most importantly, I also keep an eye on the longer term picture, which is the daily chart. And I have shown this chart repeatedly, and it is up to your responsibility to go look it on the Twitter feed. I have shown the longer term chart and the shorter term chart of Electronic Arts. This stock could, and I've repeatedly said this since Thursday and Wednesday, I believe. I'm not sure how you could have missed that. Anyway, that the stock has a good shot to go to 102, if not 108. This is a beautiful pattern. This is now it's back to patterns. This is basically a cup and handle. This drop that we also played for almost 2,000% on the options was right after earnings. This was on February 20th, I believe. 1 second. Oh, come on, 1 second. This stock was $151 last July. It's got a lot of room to move, in my opinion. So this was earnings. We were long the earnings. excuse me, sorry, it's so frustrating. Okay, we were long the earnings and options. They were cheap options. They were like $3 or something. Stock dropped almost $15. Yeah, almost more than $15. Turned around, started running. You start to see these candles. I kept on saying buy, buy, buy. Calls bought at 40 cents. 40 cents, okay? 40 cents. Went to $4. No, what $4? They went to $6, yeah, between $4 and $6 or more. So that was 1,000% plus, 1,000 to 1,500%. So if you put $1,000 in, you would basically take out $10,000. Seriously, okay? So $1,500. So this type of candle expansion, stock then hit a wall at around the close to 108. Pull back. Now we are back in again at this level. This is a cup and handle. A double bottom cup and handle. Technically speaking, the stock is poised for a breakout back towards 110. Market cooperating. So this is the type of pattern, a glary pattern, where we're studying the patterns. And again, I have very detailed, specific trading charts on Electronic Arts. At your own time, please, Anu, review them on the Twitter feed. Okay. So, so in answer to your original question, yes, I look at patterns. Very importantly, I look at candles. I look at the volume. I look at the internal indicator, which I keep on teaching, telling people to always watch the stochastics. When it's crossing up like that, it's very simple. That means it's got the momentum to move higher. Now, during the day, this is the 15-minute chart. During the day, the stock is going to be up and down. That's normal. So I keep an eye. I trade the shorter term charts and I keep an eye on the longer term charts. I do that for every stock. So this is Wednesday. Wednesday, the stock basically comes down from roughly 96 to 94. If you have options, say $2 drop in a stock, you're probably down like 60%, right? Even though it's not a big deal for the stock, $2 is nothing for a $96 stock. But for options, if you buy something at 3 or 4, it's down to maybe 2. So doesn't matter to me because I keep an eye on my charts. They're not breaking down. I kept on going long. Stock opens up on Thursday and starts running like crazy. So you want to be situated around here. You want to be situated early, and this is called a breakaway. Basically, it's not a breakaway gap, but it's a complete momentum breakout. You got to buy. You got to sell somewhere around this zone. It's approaching 100. I showed that. I don't wait around for 100 because I know people in their head think, okay, it's 100. I'm going to sell it if they're long. So I tend to sell mostly around 98, 99. And this is where we are right now. So I look at the internals, I look at the candles, I look at the patterns, I look to see whether the stock is on what type of breakout. And I'm trying to find another stock, and then that's how I do it. Now it's not, it's that's really the simplest way of doing it. So here's Caterpillar. No, not Caterpillar, hasn't been lately. Finding another example. Okay, here. This is one of our, which was a very solid winner, and I feel that it's going to go higher. I've mentioned this quite a few times. This after earnings, it dropped $10 or $7, then it turned around and almost went green. That's Okta. This is a artificial intelligence cloud company, works with Apple. Here's the stock the day before. I'm sorry, Wednesday, Thursday. No, here's earnings. Okay, Okta calls went from about $4. This was after hours. It opened up on Friday here at around 70. Started running like crazy. Calls bought at around 40 cents. Went, let me just check and tell you. I already put this out. It was less than 40 cents, whatever. They went to almost $1. So that's about 150% on your money just during the day. These this is pretty clear by just looking at the candles. There was a lot of buyers, institutional buyers coming in, and I believe the stock is good to go to around 82, 84. And I asked people to buy the 75, 80, and 85 calls. They're all very cheap. So this is a pattern also that I can identify, which is this is known as the inverse head and shoulder. You have to know patterns. Head, left shoulder, right shoulder, neckline, breakout. This is an inverse head and shoulder. Okay, you can see the shoulder here, head, and these are big money makers. So the stock is good to go. So that's a simple way of doing it. And Anu, like I've mentioned to you before, if you want to get deep, these sessions are obviously very helpful to you, and there's all the other stuff on the Twitter feed and thing. But if you want to get very, very serious about it, then sign up for the ACS sessions, and I'd be more than happy to really teach you, which I always do, all the mechanics of how these things work. It's not hard, but the faster you understand, the better off you'll do. Did that answer part of your question?
Yeah.
Okay. There's not one way to determine. The easiest way to determine is the pattern, the candle movements. Volume is important, but not that important all the time because the machines mess around with the volume. The internals are very important. They're very important. It's giving you an idea, and you have to keep an eye on the bigger picture and then the shorter term picture of what's going on. This is the daily chart of Okta. And when I look at the daily chart, this is one of the things I'll show you. When I look at the daily chart, I can see that the stock really did not violate any major. See, the stock closed to almost 80. This was a massive inverse head and shoulder, which lasted for months and months last year, since last August. So inverse head and shoulder, head, left shoulder, right shoulder. This is a multi-month chart, right? And then the stock broke out. The stock broke out on the 21st of January and started running. Once it broke out, started running, or it came back, retested, slipped a little bit, and then by the end of the day, it stayed above this support. So the 75 support is extremely important. So looking at it right now, yes, the stock has room to move up back towards the low 80s, and that's very decent sum of money. So that's the bigger picture on this. But if you look at the candles, one sec. Remove all drawings. Clear drawing set. Yes. Okay, now we can see what happened here. Okay. See this type of candle, Anu?
Huh?
Yeah. This is a very powerful candle. Very powerful. This is on a daily chart. This is millions, multi-million, sometimes billions of dollars that have gone into in one single day. If this was blood red like that, that means the stock would have fallen lower. But when it started turning around 70 and created this hammer reversal, it's like a firecracker. It's a hammer, right? This was very negative. Then the stock started to recover. This was on the 4th of March. This was on the 8th of March. So this is a very powerful move. When was the last time? This is how you detect. When was the last time you see something like this? Let's look back. The closest thing that I can come to of this type of massive reversal pattern is here. And a little bit here. Do you see what I'm talking about?
Yeah.
Exactly. So these are early signals that the stock is ready to move, and the buyers came in. And on top of that, I was telling people to buy it. And at the end of the day, if you look at my Twitter feed, Canaccord Genuity, which is a Canadian investment bank, which owns, which also owns companies in the United States. They're big. Canaccord issued they said the stock would be a $200+ stock a couple of years down the road, and short term can go to 85 bucks. And that came late in the afternoon. But by that time, we were already in it. So these are powerful indicators. All right. Drew, you haven't asked a question. Go ahead.
All right, can you hear me, Frank?
Loud and clear, sir.
All right, great. When you're looking at a stock like either Tesla or Amazon, how often are you doing a hedge bet on those stocks? Because I noticed that they move quite a bit.
I don't hedge. I either go long, and sometimes, no, that's a very good question. I don't hedge it because I'm scared to short them unless I'm early on the short. If they're opening down 30 points and they go down another 10, I would rather be a buyer on the pullback. I make more, this is just my opinion. I make more money on the long side, as you saw with Tesla, as you see with Amazon time to time, than I do by shorting them. However, you can certainly short them, like you correctly said. These are heavy duty stocks. So when they fall in chunks of $5, $10, $15, right? So
Right.
I don't hedge them in the sense, hedge meaning like going short. That's what you meant, right?
Right.
Or did you mean by saying you have both a straddle, like a call and a put? Is that what you meant?
No, yeah, straddle. Yeah, no, a straddle.
Oh, I don't straddle those ones. I will only straddle those type of talk. The only time I'll do it, sir, is during earnings. At that point, I will attempt to do a spread by buying a call and a put, or doing a more complicated spread, which is basically selling a put, buying a call. But the only time that I will basically do a spread or a straddle on companies like Tesla and Amazon is when right before earnings. But during regular market volatility events, I will wait for entry points, generally speaking. And as during the day, as you know, they move fast and furious. That's it. That's a daily chart of Tesla. And Tesla's been a big winner, as you know. So this one, for example, this is Tuesday. I told people to buy it in this zone, as you know, and Tesla basically is up $15 from there. Now, this drop on Tesla also caught me on the downdraft, but instead of shorting, which I could have, and you certainly can, you could have shorted the stock from 284 to 2 thing. I'm looking to dollar cost average at this point down. I can trade it intraday for 14 points. These are very tradable stocks. If you're fast, you can trade them for an hour or two. Day traders do that all the time. This is 14 points. Let's say you make 10 of that. Your option, you could get a nice 50, 60, 70% on your calls. Then you get the automatic downdraft. This was Thursday. The stock fell from 284 back to 275. I showed it repeatedly on my charts that I would be a buyer around 275, and then the stock took off like a rocket overall, after pulling back a little bit on Friday afternoon, around 10 o'clock when the market opened, as you can see. So generally try to play it on the long side, and especially with Tesla. Again, at the end of the day, big report came out, as you all saw on my Twitter feed. Citron, which is one of the world's most powerful short-selling companies, said, and these guys shorted Tesla. They're like shorting Tesla like here and there, and Andrew left. They come out and say, you know what? We love Tesla till 320. He said, obviously love Tesla till 320, because if you look at and I said, great. And the stock started running again. Because if you look at it, the 320 zone is where my charts is showing that where the stock will land up. Now, there are different catalysts behind it. I showed you guys, I tweeted out on Thursday night or Friday morning, the news from the Shanghai Post that Tesla has secured funding for building the Shanghai plant. That's hugely positive. But you never heard that on the financial media, because they all want to keep on like bad-mouthing Tesla. All they do is bad-mouth Tesla, CNBC and other news media. I don't know why, but seriously, I know why. So but end of the day, they had to say, Tesla's building a Shanghai plant. This is big news. So bottom line is, Oh, and their Model Y is being revealed on March 14. So from a technical standpoint, if market reasonably cooperates, we should be good for Tesla up to the 300 level. I'll be happy at the 290 level. We were buying at the 275, 280 level. So on a technical basis, this chart and Tesla is a very volatile stock, you know that. So but best case scenario, it hits the downtrend line where it was rejected. This was the fallout. This was looking really good to go up to 327. We played this and then we got caught on this move down, and I started buying again. So 300 downtrend line is at 310. 290 is another line of contact. This one right there, and best case scenario 320 to 3. This is the gap. That's a gap fill. 320 to 326. So technically, if you look at this pattern here, I want all of you to focus. And I repeat, Tesla is a fast-moving stock. It gives you the returns like right away if you're on the right side of the trade. Look at this pattern going back to April of 2018. April of 2018. Everyone with me so far? Anu,
Yeah.
Drew, Serge?
Yes.
Okay, good. Look at this pattern. This is 2018. We have a very, very strong, definitive support on Tesla at 240. We also have a secondary support of Tesla. And this is going back a year, 12 months. See what I'm talking about? We are at some major support levels, regardless of the news. You know, people badmouth Tesla. They're going to go out of business. Their cars are blowing up. Elon Musk is a crazy man. Most geniuses are crazy. You know that. You know? So that's just the way it is. So all this stuff, you know, companies running out of money. Company just paid a $920 million note bond that was due just last week. And I remember them saying they won't be able to pay that. Oh my God. They just secured 500 to $1 billion with China Construction Bank and I believe in the Shanghai municipal authorities to build a plant in China. You know what the greatest thing about building a plant in China? They don't have to pay import tariffs. They just build the car there, they sell the car there, and the Chinese love Teslas. And they're building the cheaper version. So there's a lot of positive catalysts, but forget all that. Look at the technical stuff. Going back 1 year, we are at some major support levels. Now, if it does break this line here, which is 270, if it breaks 270 with this type of candle, I believe I'm going to go short, because at that point, it would look likely that the stock will test the 240 level. So you can hedge or short your long position based on that. I just short it. I just get out of my long positions if it breaks around this level here, because at that point there's going to be a very fast selling. Hedge funds love trading this stock. The machines go nuts trading Tesla back and forth. So far so good. I'm looking for 290. I'm looking for 300. Best case scenario, and I'm talking days. Okay, this week, and I'm looking for around 310, around that level, for the stock to move this week and next week. Amazon, you asked me about Amazon, Drew. Amazon is a heavy duty stock, okay? Amazon's chart on the daily, this has already been drawn. It's absolutely beautiful. You could short these moves. Absolutely, sir, you can. I played the long moves. I played these moves. This chart has been drawn for you to literally robotically trade from a swing basis. Look, I drawn this downtrend line, not today, way back. I'm not downtrend line, support line. Look what the stock did. It hit that support line and it created a powerful bounce. Amazon was down how much on Friday? A lot. Amazon was down 40 points on Friday when the markets opened lower. So Serge, this brings you to question. If you're long Amazon calls, you're like, oh my God, look at this. Stock's down 40. Amazon closed on Friday. It was as low as 1586. It closed at 1622, the day's high, in the green. Welcome to volatility and the robots and the machines, guys. Okay, so Amazon has major support level here. I'd shown this to you guys before. You got to focus on my charts and then use your own judgment. What do you want to do? 1567. See, that's major support. But the stock came to, and the secondary support was here, which is 15. Sorry, there. Take it out so you guys can see it. Why did I draw this line? Because this on the 29th of January, the stock also opened lower and then suddenly started to turn around the next day and went crazy. So to me, that's a major level of support. So that's 1589. Call it 1590. Where did the stock go? So 1589. Where did the stock go on Friday? It went slightly below that, went to 1586 and created a nice hammer. Given where we are, what's the next level? The next level is this downtrend line. Look at this downtrend line. 1643. The stock closed at 1622. If markets open higher, tomorrow the stock will hit this line. Amazon will be up 20 at the open and I will sell. Now, when I sell, am I going to say, okay, I'm never going to trade it? No, I'm going to see what happens and then I will re-enter because Amazon still, in my opinion, given market conditions favorable, will go to 1736. I like trading Amazon 10, 20, 30 points, strike prices higher, and they still move. Because if you buy in the money, it costs a lot. So Amazon's technical chart is looking strong. You basically have a inverse head and shoulder with this is your right shoulder, this was your left shoulder, this is your head at 1350, and all I'm doing is looking to trade it between 1600 and 1736 or even 1700. That's a 100-point move back and forth that you can trade. So this, technically speaking, this is a good-looking chart overall. If this breaks, all bets are off. Then you're back down to 1400. That means the market is going to fall 1,000 points overall. Now, intraday, you can trade it. I don't really trade off Thinkorswim intraday. I use my other system. But in intraday, you can trade these candles. But so that's the answer to your question. Any other quick questions, please? These are very, very good questions that I'm sure when other members listen to them, these are questions of reality from traders. They will find it extremely helpful. Any other quick questions? I'm here to answer them. I still have a couple of minutes.
Nope, I'm good, Frank.
Okay, sounds good. Why is this? This is another last thing that I'm going to talk about tonight, so I'm just giving you guys a little sneak preview. I have shown this repeatedly on Friday. This is classic technical analysis. Classic technical analysis. Can't get any better than this. What's better than this is basically my structures that I draw on top of it. We had a gap here. It filled the gap. This is, this doesn't have the 200-day moving average on it, but it filled this gap, and now it created this lovely candle. This was the highs on the market. This is such a technical chart. It's unbelievable. This is the highs on the market. The bears started screaming, oh, it's all over, it's all over. They said it's all over when it was down here, when the market was down there. And you could have made a gazillion dollars if you traded the charts. I mean, seriously, get rich. All right? But people don't do that, right? All they think about is that everything's going to just die tomorrow. Bottom line is, it filled this gap, which was the same gap that I kept on showing, and it bounced. That bounce can either move a little bit higher. It has room to follow higher. However, if it breaks below 2,700, then we have a good shot that we come back and retest these big shoulders, which in my opinion, the market will still do, but not necessarily in the month of March. This is a head, left shoulder, left shoulder, left shoulder, right shoulder. And these shoulders were constantly shown as the markets were climbing higher. This will get retested. Just, I don't think it's going to happen. Like, it will get retested if there is no China deal. Okay, but in the meantime, you could have played the market like a violin on Friday, because I kept on showing this chart and other charts, obviously, that this gap got filled and then the market turned. This little candle is 300 points on the Dow from the way down to higher. So there's this juice in here to tell us that we can go to about 2750. That's my next line. Oh, that is the 200-day SMA was 2750. My opinion is the markets will attempt to go over the 200-day moving average. I'm not sure why it's not showing here, but I had it marked. Anyway, and we can go from there. Now, somebody who is a very bullish on the market, and I'm kind of a tactical bull, right? I'm ready to adapt to the downside if I see that type of stuff happening. They will say, hey, this is a bull flag. And it certainly looks like a bull flag as long as it can hold this level here between 2700 and 27. Now, why is this important? Because when it breaks out of the bull flag, you better be prepared to make some crap load of money as it's breaking out. Because bull flags look like this, right? And then they tend to break out. Or they move sideways, they break out. Or they create a pennant and break out. Those are bull flag formations. Or bull flags look like this. These are the most powerful bull flags, this is not that type, and then it breaks out. This is this one. Markets went up nicely, and then it consolidated for 5 days in a row. 1, 2, 3, 4. On the 5th day, it created a solid green candle. So it is still looking like a bull flag. We will see whether that's the case. In the meantime, I'll explain all this stuff tonight. All right. Have a great rest of the afternoon. God bless you all. Thanks for attending. And I'm sure other members will thank you three for these amazing and very simple but direct, powerful questions regarding real trading. Thank you for joining. Serge, look forward to working with you more. Thank you. Bye-bye.
Thank you.